Hello, Mark Sturdy here with another extract from our research this week, 7 Days Ahead's survey of major world markets. And you'll see from our summary that we could in fact have talked, well, about the S&P 500 that we retain great bullish excitement for, the oil, which we think is now bullish, if not in the very long term, certainly medium and short term, patterns are very bullish, and gold, which we remain a bull. And we could even have talked about the dollar yen, which we think is at an incredibly exciting point and well worth following. In fact, we think that's the major chart in the currencies. But we're not going to talk about any of those. I'm going to talk about the US Treasury note. And the reason is that something interesting is happening here, it seems to me, which is not that the long-term chart's changed much. We think it has made its huge rally in yields up to just shy of 5% and is now probably staggering around between 3 and 5% in the very long term. But rather, we think there's something in the very short term of interest, which is that here's the yield chart. You'll see the 3.5 is the bottom of the yield range at the moment. There's 5% out there. There's 3. We think it's more or less in this range. But I just wanted to point out something quite interesting here, which is that it is the completion of a continuation triangle in the price chart. This is the June 24 daily futures chart and how the market's broken down. That suggests to me of a move in prices of about two and a half big figures, which is a sizable move, and I think might take us back towards 5% in yield. Obviously, a fall in prices is a rise in yield. A move of 2.5 big figures on the downside in the very short term and perhaps the medium term. So worth pointing out that very short term looks like US rates in the 10-year are rising and prices are falling. Thanks.